Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 13th of April. All right, now just having a look at the markets here, the general news. Asian shares gain as US inflation data not as bad as feared. Well, I'll tell you what, there's a couple of different things here, and you need to sort of understand what's going on. So, first of all, the inflation numbers themselves. Now, massive print, right? 8.5% year on year. Now, usually if it's above 3%, they're raising interest rates, right? So we are getting well beyond normality, right? But the one reason why the dollar hasn't gone for a massive run and equities haven't been hammered is because they were expecting 8.4%. They were expecting a high number. Now it's slightly higher. And if anything, the market's just sitting here wondering what to do. You know, the Fed or some journos are saying, you know, this is the peak of, you know, where inflation is going to peak. They said that around 4, 5, 6, and 7%. So I don't think they can keep doing that anymore. They're going to start doing some action. So I think the market is a little bit like delivered the answer in a bit of shock, going, okay, that's cool. So what does that mean? And I think we'll start to see it roll on into a strong dollar, weak equity market as we go forward. And the month-on-month numbers, we just change colors here, 1.2%, and they're expecting 1.2%, right? So the overall picture of the numbers is the numbers, regardless of what the market was expecting, are outrageously high and a big problem, right? So when you come back and you might have, you know, if you came back to the screens and you were looking at the currencies going, well, I'll tell you what, 8.5% and the equities are off 0.3%, 0.35 around there. Well, that doesn't make sense, right? And in fact, during the Asian session here at the moment, there's a bit of a bounce, right? The market's sort of thinking, well, that's not so bad. I can tell you when they process the data, fund managers alike will be anticipating, you know, high rates from the Fed, a sharper move in interest rates, and that should drive the markets, you know, equity markets down, dollar, well, probably up. Now, just at the moment, when we look at the general pairs, okay, you got the US equity futures rallying, and we have a very clear risk-on profile. Euro, sterling, Aussie, Kiwi all bouncing. The dollar pairs, the yen's like its own little safe haven world there. The dollar pairs generally going down, and the Euro, sterling, Aussie, Kiwi rallying, right? Simple. Once again, if you can line up what's going on in the equity markets and the currencies, well, then the rest of it should sort of relatively fit in. Now, you can see here as well, there's a lot of cash, extra cash in the cryptos. They're having a really good day of it as well. Once again, you get the big dogs, say Bitcoin, Litecoin, Ethereum rallying. It takes the rest of the cryptos with them. So it's one of those things, and, you know, pressure off the equity markets, maybe pressure off the cryptos. It sort of seems to be the way of it at the moment. The one thing with the commodities are enjoying having a good day, enjoying the blue skies. They're all sort of rallying. The metals, oil, and iron ore, for that matter, is coming back a little bit somewhat as well. All right, so there's plenty to play for, right? And so you can't, by just looking at these numbers here, right? So the equity markets, to me, with those inflation numbers, will come off, right? It's not a matter of when they will, or it is, it's a matter of when, but what you're waiting for, so the market may be well short equities already. There's a bit of a bounce here at the moment, okay? But I tell you, I've got to say, it's got to be short-lived. Now, let's just come through to the various charts, and I'll give you a bit of a run through the global markets, see if we can't piece together some sort of action. Now, ideally, you're trying to work out what's going on. We know, okay, we've got a strong dollar perspective, which is, once we get to the currencies, very evident in dollar yen. Euro, we know it's the opposite side of the basket there, so it's under pressure once again. Once again, the French election, a key component of that. Gold, well, it's had a few cracks up here around 1970, hasn't finished yet and is not coming off. So to me, the rally still looks like quite evident. The surprise to me is oil's had a pretty good rally. I can't really sort of pinpoint it. I've had a chance to go through everything on the oil side of things, but it's broken through that resistance level in the 97s there somewhere, and it's now sort of heading to the top side. The equity markets, well, they are lower, but not by much just at the moment. I think that's a story that's going to develop over the coming days. Don't forget, we've got the ECB on Thursday. The Bitcoin, well, it's stabilized here, sort of just under 40,000, right? Still under pressure, but once again, having a bit of a relief rally day, and commodities still sort of moving sort of topside, especially, and that'll become more evident as we go through the commodities. Currency-wise, just on the currency watch, okay, not much sort of different here. The one surprise to me is, and it's a little bit baffling, like euro is coming off, dollar Swiss is not really moving anywhere, right? The dollar against the basket is higher, sterling is lower. The Aussie price action and Kiwi price action is a bit of dog's breakfast. If you were trading those pairs, you generally lost money, right? If you got short, it rallied. If you got long, it went down. So that is a very tricky one. And same for dollar CAD. You know, with the dollar US data, you got the oil sort of whipping around all over the place, and then the CAD itself, it is a bit too tricky. Once again, the dollar yen is the best trending currency at the moment. Probably worth looking at, and have a check of the yen crosses. I was going to say the Asian crosses, the yen crosses. Right, equity markets. Well, if I just give you a look at the main data page, right, it's not great reading, right? Yesterday's markets, a lot of red, but we are seeing today's US equity futures at the moment during the Asian session rallying. That should put a positive tone across a lot of those equities in Europe and North America as we get started. But still, the technical aspect of the equity markets is not good, right? And it's actually hard because it's like there's not much traction. They are in the middle of nowhere. The S&P, NASDAQ, right? They're sort of still under pressure with not much happening. Stocks, the DAX, FTSE, well, FTSE's just sort of topping out. It's been the most outperforming equity market, the Australian All Ordinaries. I think the market, like fundamentally, equity markets should go down if the Fed raises interest rates. Now, I know the news was saying, okay, the US inflation data wasn't bad. It's like bad in relative to what? History, it's a shocker, right? Just because they're expecting a high number, as I said, doesn't mean they're good numbers or not so bad. You come back to the cryptos, right? I'm telling you, these things have got a life of their own, and they are trading quite well. And it's easy to sort of manage different aspects of them. I left all those orange previous support lines in there so you can see where they're breaking. Still, they are under pressure at the moment in the middle of nowhere, right? Very hard to be trading them, probably getting into trades just at the moment. But if you are looking for, I look for sort of opportunities where there's something out of whack, right? If I'm looking at the relative strength hourly on the main cryptos up here, you can see they're all pretty much around the same sort of level. So there's no disproportionate sort of move. So I'm not really sort of getting overexcited just yet. They are all moving together. It's a good way to sort of clarify that aspect when you are looking at the, because when you look at the charts, it's hard to sort of see that, right? When you, and then you got the commodities, right? As I said, gold still looking like it wants to go topside. Let me just blow that up a bit. It gives you a bit better look at what's going on. Silver also, copper, and I'm missing a bit of data there, but you can sort of see where it is. It's coming back a touch. Iron ore dipped below the support trend line, now coming back to test it. That's probably a key one for the Aussie. And you've got crude heading higher, light crude, Brent crude, both moving higher. Commodity basket index there should be higher, which it is. Makes a lot of sense. All right, so when you come back and you're trying to piece it all together, as I said, going through the news, connecting, seeing technically what can happen on the charts, and then coming back to this page here, which is more of a fundamental page, right? You've got the core instruments. What you need to do is understand how they connect. At the moment in the Asian session, okay, US equities closed. It's the equity futures that are going to give us the direction. We're seeing a direct relationship here, risk on profile with the currencies. And that also seems to be working with the cryptos for that matter. It'd be good to see that relationship develop more as the cryptos develop more trading history. There might be a situation where a risk off profile, we see Euro, Sterling, Aussie, Kiwi lower, and also the cryptos. we get that rolling, we're going to be sort of making a lot more cash. Commodities, as I said, are up. The safe havens, well, a bit mixed. And the oil trade, well, oil's higher. So check out the pairs there. Dollar CAD a little bit sort of bent out of shape with its relationship with the US dollar, but CAD yen following that oil move higher. All right, guys. Now, what have we got to do? Well, as you know, the ECB is coming out on Friday, on Thursday. Why did I say Friday? Keep an eye on today, the sterling, right? You got CPI, RPI, okay, the consumer price index, the RPI is the retail price index. You know what? Big number, right? The inflation numbers are one of the biggest numbers for all the central banks. So keep an eye on inflation there. We start to see inflation move in the US and everywhere else. All the central banks are going to be very busy. I can tell you, inflation year on year at 6.2% is a concern, right? Even for any central bank, let alone the Bank of England. So then, as we've got the Bank of Canada rate decision also, and that's going to lead us into Thursday's trading, where you got Aussie employment numbers, but more importantly, the ECB meeting, right? So we're right into the business end of it, or the business part of the week. I was going to say business end, but we're right in the middle. We've got the answers from the US inflation numbers. I'm telling you, I think the move has not happened yet. The real move, the real dollar push. US inflation is at 8.5%. You look at any historical journals or anything else, they would be pulling their hair out and very worried at the moment. At the moment, the media is making out that it's like no big deal. I'm telling you, it's a big one, and we are yet to see the follow through. I think that will come through on the equities first, and then we'll see how it connects with the various asset classes, the currencies, cryptos, and other equity markets. All right, so plenty to play for. So just keep an eye on sterling today, right? Sterling's got to be your main sort of focus, and obviously the CAD. Now, the CAD's not exactly the easiest trading instrument at the moment, but the CAD crosses maybe where your answers are, right? So keep an eye on those two things. It's going to be plenty of activity, and this is going to lead us into Thursday's trading with, once again, another action-packed day with another central bank, the ECB, in action. All right, guys, have a good one. All the best. Cheerio.